Hold up. Did Bitcoin just make the American dream possible again? Because for the first time ever, Fannie Mae, a U.S. government institution, just approved a Bitcoin-backed mortgage, which means if you've been stacking Bitcoin, you can now buy a house without selling it. No forced liquidation, no capital gains taxes. And here's the part that nobody's talking about. This is a tactic that billionaires have been using for decades. And now, it's available to normal people like me and you. Borrow against assets, never sell. That's the game that the rich have always played. And now, Bitcoin allows you to do it too. Today, we're going to break down exactly what just happened and why this may be one of the biggest Bitcoin adoption stories ever. This is Dante Cook with Bitcoin Simply. Let's go. Fannie Mae, a $4.5 trillion U.S. government-backed institution, just announced that they will accept Bitcoin as collateral for the first time ever through the mortgage loan process. Here's the details.
It's not the first crypto-backed mortgage, but it is the first to comply with Fannie Mae requirements for purchase. Better Home and Finance, together with Coinbase, are offering a new mortgage that would allow home buyers to use their crypto assets as collateral. It falls under Fannie Mae guidelines, so it can be bought and securitized by Fannie like any other conforming mortgage. All right, how does it work? It's a little tricky. The borrower takes out a regular mortgage with Better and then a second loan backed by either Bitcoin or US dollar coin and held in a Coinbase account. The second loan would fund the down payment on the first loan. That way, the borrower doesn't have to sell their crypto. Both loans are held by Better, and the crypto assets, once pledged, cannot be traded. Even if the value of the crypto falls, nothing changes on the loans as long as the borrower keeps making the monthly payments.
We have now finally created the infrastructure rails to enable any tokenized asset in America to be able to be pledged to help someone afford to buy a home. So it starts with Bitcoin, starts with USDC, but going forward, it can be Apple stock or Amazon stock or any publicly traded mutual fund, bond fund, something that you might hold in your IRA. You're going to be able to pledge that to buy a home.
Now, the downside is you are paying on two loans, which makes it a little bit more expensive. But Garg says since you're not selling the crypto, you're still benefiting from its appreciation, if it does appreciate, which offsets the higher cost. Other companies like Milo make crypto-backed mortgages, but without the Fannie backing, so their interest rate would be higher. If you want more details on this, I know it's complicated. It's all up on CNBC.com right now, Tom.
This product makes a tactic used by billionaires available to everyone who's been stacking Bitcoin. Here's how it works. You pledge Bitcoin or USDC as collateral, which gives you a loan for the down payment. You keep the Bitcoin. You pay no capital gains and the rate is just 0.5% or 1.5% higher than the normal rate. Key detail, no margin calls, no collateral top up. If Bitcoin drops in value, the mortgage remains unchanged. But if it continues to go up in value like it has since its beginning in 2009, well, you get the value of Bitcoin as equity in your mortgage home product. The only liquidation risk for delinquency is if you make no payments for 60 days or more, same as any conventional mortgage. This is how the billionaires have operated for decades. Borrow against your assets and never sell. Private banks have built products around this sort of thing for decades. The difference now, it's available to anybody who owns Bitcoin. The CEO Vishal of Better said it plainly. We finally now have created the infrastructure rails to enable any tokenized asset in America to be pledged to help someone buy a home. It starts with Bitcoin, the supreme, pristine collateral asset. Bitcoiners have always had the same problem. We worked hard, we saved, we delayed gratification, we stacked through the volatility. When life happens, when you want to upgrade your house, you want to add to your family, you want to move, you want some stability, the system says, great, sell your Bitcoin. Then you get hit with capital gains, the opportunity costs, and the emotional toll of selling the only asset that you actually believed in. And this changes that. This is the system validating that Bitcoin is in fact actual collateral and a better savings technology. Michael Saylor has been screaming this for years now. Bitcoin is pure monetary equity. It's liquid, it's portable, it's scarce, it's global. There's no roof to replace, there's no plumbing issues. There's no property tax surprises. And Michael Saylor gives us the real reason as to why this is going to work out for homeowners everywhere. Listen to this clip.
Okay, Bitcoin's up about 37% a year for the past 5 years. That's the slowest it's ever grown. Our company's strategy is up about 55%. We've levered that Bitcoin. The bet is Bitcoin is going to outperform the 11% over the next decade. Now, if Bitcoin outperforms the 11%, then our company equity is making a lot of money. If Bitcoin performs if it's up 2% a year, All it needs to be is 2% a year. We can pay those dividends forever, Brian. And if Bitcoin...
If just up 2%.
Because we're sitting on a mountain of equity. We're sitting on more than $50 billion of Bitcoin as collateral. So Bitcoin only needs to go up 2% a year for us to pay the dividends forever.
In the slowest period of growth that Bitcoin has had since 2020, it's still grown 37% a year. And if this is used as collateral as equity in a mortgage home loan, well, this is growing much faster than the debt payments that you have at 6 or even 7% right now. So what happens is the Bitcoin equity actually ends up repaying your mortgage faster than the payments on the interest system that you have in general. And Coinbase understood this fundamental fact. Homes priced in Bitcoin get cheaper over time.
In 2012, you'd need 30,000 Bitcoin to buy this house. A decade later, it had only cost you 20 Bitcoin. And today, it could be yours for 5. If home prices keep falling in Bitcoin, why do they keep rising in dollars?
But for all the good news out there, we're still going to have haters. No sooner than Monday, I predict that we will get the talking heads talking about how risky this is, how this is such a bad move, how Bitcoin is going to get millions of Americans' homes liquidated. Oh, you mean like the great financial crisis, which got us into this mess in the first place. There are going to be people out there to try to capitalize on the moment to say that you can tokenize anything, like Peter Schiff, who says that the biggest threat against Bitcoin now isn't that it's fake, that it's not worth anything, it's tokenized gold.
The real threat to Bitcoin now isn't all the shit coins. It's tokenized gold. Because tokenized gold does everything that Bitcoin is supposed to do, but can't. And everything that Bitcoin can do, tokenized gold does better.
I've got a news flash against you, Peter Schiff. Gold cannot be used as collateral to borrow against in a home mortgage product because no bank wants to have the security or the ability to validate, to store, and to manage bundles and bundles of gold. They would much rather do it with a digital wallet that's verified every 10 minutes on a ledger. This is exactly why we don't have gold as a reserve system today. The price and the cost to have gold as collateral is just too expensive. If that was the case, we would already have gold-backed products. And if that was the case, a company like Ledn would have built their product in 2018 on gold versus Bitcoin. But instead, they chose Bitcoin because it's pristine collateral. If this episode makes it apparent to you why you should borrow against your Bitcoin, well, use a company like Ledn, the leader in Bitcoin-backed loans since 2018, allowing you to borrow against your Bitcoin with no capital gain to get fiat liquidity instantly instead of selling your Bitcoin. It's an institutional-grade product with loans that start at just 12.4%. Repay them instantly and never have your Bitcoin rehypothecated. If you want to learn more, go to learn.ledn.al/simply to get started. You'll be one of the thousands of people who've left 5-star customer reviews. I can guarantee it. And if you've been stacking seriously, well, you're thinking about not just owning Bitcoin, but how do I custody my Bitcoin? How do I hold it as collateral? So if I want to use it for a loan process, I know how to do that safely, securely, and privately. That's where the Bitcoin way comes in. Your private personal team to help you and your family learn how to navigate taking self-custody and sovereignty over your assets. Schedule a free 30-minute consultation with their team at thebitcoinway.com/partner/Dante-Cook. The link's on the screen if that's too confusing. Get a coach and get a partner. Jeff Park, the CIO at ProCap Financial, has an interesting thesis. He says that every generation goes through a great monetary reset. The future will not look like the past. The past to where if you are a older person, a boomer, I don't want to be derogatory, you could have bought a home at 18% interest rates, saw rates go down to 0% and think that you were somehow more financially wise than everybody else. You worked hard, you saved, you stored. Well, that's not the world that we as millennials were born into. And that's why we think that Bitcoin is that great monetary reset.
Portfolio theory is one of my held close to heart projects to espouse the mission of dynamic investing for the next generation. And it ultimately goes back to the view that most economists assume the world will look the way it does in the future based on the past, but the reality is there's always a great monetary reset that happens every generation. And I do believe that we're in the midst of one where the death of the Washington Consensus is unlikely to dissipate. So everything we've known about investing based on Warren Buffett or Benjamin Graham's Intelligent Investor are built on this foundational assumption of what American capitalism looks like and what that represents in the risk-free rate of the US Treasury bonds. Once you assume that the US Treasury bond may not represent the risk-free rate, and one of the cases I make is actually people should start calling it the risk-full rate rather than the risk-free rate to reflect what it is in the construct of our ever-growing deficit and our debt expenditures. You have to rewrite what that future is going to look like and the roles of other exotic and esoteric assets that can play into portfolio construction. So my theory is that there's going to be a very big generational liquidity transfer in the future. And that's because there are certain signs that point towards that inevitability almost with 100% certainty. So, as John Maynard Keynes says, it's better to be probably right than precisely wrong. And the thing that I think most people have precisely gotten wrong is that the demographic trends in this country is inverting. And that inversion is going to result in a wealth transfer that is almost unavoidable. So as I've looked at the latest stats, in 2030, which is 3 years from now, all the baby boomers are estimated to be about 65 years or older. And that's 1 out of 5 Americans. And then in 2034, which is only 70 years from now, there's going to be more adults living than children for the first time ever in American history. And then 2 years after that, 2036, the fertility rate of this country is going to go below 1.5, which is well below the replacement value. And it's projected to stay there for another 20 years because, as you can imagine, if you're not having kids then, you got to wait 18 years for them to become adults to even have kids. So we know this train is coming in that direction. And I think in preparation of that, we have to think about how to invest for the future, not what we're taught about what 60-40 represented in the past 3 decades, but what it could look like in the future.
What if the world is changing? Fertility rates collapsing. Fertility rates collapsing, household formation changing, asset transfers moving from people that own homes to people that own digitally native assets. The debt burdens are rising, not falling. Inflation is rising and not falling. Global tensions are rising and not falling. And domestication versus globalization is the major trend for every country in the world. This means the massive wealth transfer is going to be into assets that were physically stored to ones that are digitally stored, and ones that can't be replicated, can't be copied ad infinitum, and aren't susceptible to AI disruption. And that asset is Bitcoin. This is the huge thesis, and this isn't obvious to everyone. The next generation will store their economic energy into an asset and not into a home. And that's why people like Matt Hogan say that Bitcoin is attractive at these levels. He's taking a look at flows, structure, positioning, and the fact that Bitcoin is not going to zero at this point.
A real thing that's true about Bitcoin is that if you think it's worth $1, it's really easy to imagine it's worth $1 million. It's harder to argue the 0 to 1 than it is 1 to 1 million. I think the world has accepted that it's worth something. So I think the people are licking their chops at the ability to buy it at these levels. Doesn't mean we go straight back up. Bottoming is a process. But yeah, I like that framing. If you have cash, it's closer to euphoria. These are attractive on a 10-year time horizon.
When you zoom out, you can see why Bitcoin is becoming the basis of ETFs. It's becoming the basis of Treasury reserve assets. It's entering into the sovereign conversations for global nations all across the world. And now it's becoming mortgage collateral. When the American government says that Bitcoin is now funding the American dream, it's time to pay attention. This is a comment from the Federal Housing Director, Bill Pulte himself.
Crypto has an enormous opportunity to help with the affordability equation. I mean, Bitcoin is a very stable asset in our view. Obviously it has volatility, but a lot of assets have volatility. And a lot of people have a lot of wealth in Bitcoin. And so we want to make sure that people have access to the American dream, and we're doing everything we can.
So what's the real takeaway here? It's not cool, crypto mortgage. It's the fact that the world is recognizing that Bitcoin is superior savings technology, even above cash. And if that's true, the relationship between saving, housing, investments is now flipping. The old American dream was work, save dollars, buy a house, and benefit. The new one might look like save in Bitcoin. Never sell your Bitcoin, borrow against it, and have its appreciation in the equity growth pay for the debt that you financed it in. This is a radically different world, a world where everyday people now have the tools like billionaires. Bitcoin is the monetary reset that we've been talking about, and this is the first step and the first clue. Are you paying attention? This is Dante Cook with Bitcoin Simply. Happy stacking. And one more thing, if you want to continually have Bitcoin exposure beyond just buying spot Bitcoin, Well, get into Bitcoin mining. Don't do it yourself and don't do it in your basement. Outsource it to the experts like SAS Mining, who will host your Bitcoin, help you find the right machine, repair it, maintain it, and send sats directly to your wallet without you thinking about it. Stack sats continuously. Use the QR code on the screen to get started. We're out.